Welcome back, everybody, as we continue day 2 of the Nadex Virtual Education Summit. Today has been about advanced concepts. We did a deeper dive into technical analysis to start the day off, definitely let you get a glimpse of the platform. And then we did some more technical analysis with Brian from Keep Trading Simple on average true range. Next up, we've got another great partner of Nadex. It is Rockwell Trading. We've got both Mark and Marcus here to go through a knockout strategy, one that they like to talk about and teach their folks about. With that, I really don't want to take up any more of their time, so I am going to make Mark the organizer, the presenter. Mark, you now have control of the screen. And I am going to turn it over to the folks at Rockwell Trading on the perfect knockout. Marcus, Mark, it's all you.
Fantastic. Yeah. Hey, we're excited to be here. And as you know, we love binary options. Nadex is the only way to go. And we've been trading binary options for a while now. I want to share a strategy. Well, Marcus, let me introduce you before we get into the strategy. I know we'd like to dive right in and get going into the bread and butter of the details. But Marcus, why don't you say something real quick?
All right, fantastic. Well, honestly, nobody cares who we are at this point. Everybody wants to hear the strategy. So yeah, both Mark and I have been working together for the past 16 years. We have traded pretty much everything there is. We are trading stocks, we are trading options, we are trading futures, we're trading micro futures. I've been trading single stock futures, if you remember what these were. And then a few years ago, when we were introduced to binary options, we thought that is a super interesting concept. And Mark and I have been trading binary options for probably, Mark, what do you want to say, 4 or 5 years at least,
Yeah.
right?
Yep.
So, I mean, we started in the very beginning. And now as more and more instruments are being offered here by Nadex, I think there are just fantastic opportunities. Now, what we love about binary options as Nadex is that you can actually trade them with a relatively small account. You see, if you want to trade stocks or options, it makes sense to have a $10,000 account. But here on Nadex, with the strategies that we're about to share with you, I mean, you can trade it on an account of $1,000, $2,000, $3,000, right? Just to get your feet wet and maybe to grow a smaller account. It is not only perfect for beginners to get their feet wet, but it is also perfect for advanced traders because, as you will see, there are some really cool concepts that you can do. And this is why we're also excited to be here on day 2 when we talk about the advanced strategies. So, I mean, with this out of the way, Mark, let's dive into the strategy because I also know that you have another trade on right now that we can take a look at.
Yeah, absolutely. Absolutely, Marcus. So let's dive right in. And full disclaimer, trading on Nadex involves risk. It may not be appropriate for all investors. Trading can be volatile and investors risk losing their cost to enter the transaction, including fees. The information presented within this presentation is for informational and educational purposes only. It should not be considered an offer or solicitation to buy or sell financial instruments. Bottom line, trading involves risk. There's no trading that doesn't involve risk, but the nice thing when you are trading using Nadex products, your risk is defined and you know exactly what your risk is whenever you put on a trade, which makes Nadex products awesome in my opinion. So let's get to it. And the power of knockout options, well, you could really trade futures without the hassle. You're able to put on trades with a little bit of risk. And so, some people think that futures markets are great because of the leverage potential, but there's a lot of risk involved with futures markets, right? When you're filling out an account to trade futures, there's this idea that you could lose more than your account, right? Because of the leverage. Not the case with binaries. So Nadex binaries have a risk protection built into the trade. With knockouts, it's like having a profit target and a stop loss set for you. there's no slippage with that profit target and stop loss like you'd have in the futures markets. And you could also benefit from overnight moves without having to put up huge overnight margins. And what I want to do is I want to bring up the Nadex platform. Now, forgive me, I am using the old platform right now just because I've used it for years. The new platform's awesome. I do need to switch. I feel, sometimes it's hard to teach an old dog new tricks, right? And I've just been using the old platform for so long. The new platform I love, but then I just find myself getting back to this old one. So I need to graduate from the old to the new. Don't hold it against me. But here I actually have two open positions on. And the first is a knockout trade. This is on crude oil. The rules that we're going to talk about today are going to be for a US 500 and a US Tech 100 trade. So we're going to cover the exact rules. Actually, it's a strategy that we've only introduced to our mastermind group, but we wanted to make it available, present it today to everybody here. Now, I also have a trade on the euro versus the US dollar. This is actually a different strategy. I'm not going to cover this one today because it's a little more involved. It's our power spread strategy where we're trading a call spread and a binary together. So we're not going to worry about that one. But let's take a look at this crude oil knockout just to understand exactly what knockouts are and to see what's happening here with a live trade. So I'm going to bring up an order ticket. And I'm going to create this ticket as though I was putting the trade on, which I did last night, where I went and bought the 30.50, 35.50 knockout, and my average price was 31.30. So when I put this trade on, when I set up this order ticket, my max loss on the trade was $80. My max profit was $420. So the most I can lose was $80. The most I can gain was $420. Now with a knockout bracket, if the floor gets hit, so if the indicative index, which is based on the crude oil futures markets, if this floor of 30.50 gets hit, then I'm out for an $80 loss. No more risk. I'm out of the trade and I move on to other opportunities. If the ceiling gets hit, 35.50, if the Nadex indicative index hits the 35.50 mark, then I'm out for a full profit and I'm making $420 on the trade. I can't make more than that, but as soon as that gets hit, whether it's during the actual trading session or overnight, then I'm out of the trade for my $420 profit. So I love the risk reward on this one. To me, it made a lot of sense to try and risk $80 to make $420 on a single contract. And right now, the indicative index is at $34. And we see that the profit on this trade right now is $264, $265. So it has not hit the ceiling. It has not hit the floor. It's open. If it doesn't hit the ceiling or the floor, we see that it expires in 1 day. So at the close on Friday, it's going to be done. And if it doesn't hit the floor or ceiling, then our profit is going to depend on where this indicative index settles and where we got into the trade. But up nicely on this trade. That's why I really love these knockout brackets, because I'm able to put on a trade with low risk. I know what my profit potential is, and it just needs to hit the ceiling for me to get out for a nice win as a buyer, or the opposite if I'm a seller.
Now, Mark, before we move on, let me just quickly ask, who here has been trading the knockout contracts before? If you could just type a comment in the question, a yes or no, because this helps us gauge whether we should explain it a little bit more, because knockouts are absolutely unique. And I just want to highlight a few things here. I'm just curious if you have traded them or not. Okay, so I see it's very mixed. Most of them, I want to say 2/3 have not traded it. So I want to quickly explain the difference between a regular binary option and a knockout trade. Mark, or were you getting to it on the next slide? Because if you were,
no,
then I don't want to mention anything.
I think it's a great topic.
Yeah. Okay, so you know how a regular binary option works, right? Regular binary options, you have a strike price, and if you're a buyer and it closes above, you win. If it closes below, you lose. And you also have the expiration. So here you have two prices. You have a floor and a ceiling. So this is where you see here in the order ticket a floor of 30.50 and a ceiling of 35.50. Now here is the really cool thing about a knockout. Has it ever happened to you that you were in a trade and throughout the day or at some point it was profitable, but then it turned all the way around and moved against you? Here, the cool thing with the knockout, it only has to touch the ceiling in order for you to make money. So it is not important where it closes on Friday. If any time before expiration, it just touches that ceiling, you're getting out with a profit. Now, of course, on the other hand, if it touches the floor, you're out with the loss. Again, this all is for buying it. But this makes it super cool because it basically means that between yesterday, last night, when Mark put the trade on, and Friday, if at any time crude oil moves up to 35.50, boom, Mark makes the $420, which is here the maximum profit that he can make. So only if you're stuck in between by Friday, then it is unique. But this is what makes touch brackets so cool, or this is why they're also called knockouts now. I'm still using the term touch bracket. I think for the longest time, for a year, a couple of years, Nadex called them touch brackets, and they just recently have been renamed to knockouts because it's really a matter of it doesn't have to close above or below on expiration, just at any time. If it does it, you're already getting knocked out with a profit or with a loss. So this is why it is so cool and why it makes sense to look into it. Now, I know that there's also spreads, right? And if you have looked into spreads, this is where you need to close above the ceiling on expiration. So throughout the day, if you would put on a spread right now that expires here in the next 17 minutes, even if right now it is trading above the ceiling, if it comes back and is trading below, you might actually lose on this trade. Not with knockouts here. And this is why we are so excited about this. And this is why today we also want to show you a very specific strategy. But before we move on, let me just ask you, is this making sense thus far? So that for those of you who have never traded these knockouts, that you understand what they are and also what the difference is between the knockouts and regular binary options. The cool thing is, if at any time your target price is being hit, boom, you're realizing a profit. Or, well, a loss if the floor is being hit. Okay, good, making sense, perfect. Mark, now with this basic knowledge under our belt, let's actually talk about a specific strategy that you can use.
Absolutely. So here's the strategy. If the underlying market, which is the E-mini S&P futures contract for the US 500, we'll talk about which markets to focus on. But if the underlying market on a daily chart shows that at Friday's close, RSI, the relative strength index, which is an indicator, and I'll show you how to get this, is greater than 40, what we want to do is we want to buy a knockout option at Monday's open. So the idea is that we're using a filter on a daily chart to try and find when the market is potentially setting up for a move higher. And we expect to put on a trade at the open where our risk is kept to $50 to $75 on the trade, and our goal is to make $425 to potentially $555 on the trade, depending on the market that is being traded. So low risk, big reward if we're right, and the goal is to see the market continue to move higher from Monday's open throughout the week. Ideally just hitting the ceiling on day one and being done, but if not on day one, seeing the market continue to rise throughout the week. Now, the best markets to trade are the US 500 with a strategy, and the indicative market is the E-mini S&P 500. The next best market to trade is the US Tech 100. The indicative is the E-mini NASDAQ. So here's a little bit about the strategy and the potential. With this strategy, the risk reward is awesome. The US 500, we're risking $50 to $75 to make $425 to $450 with a win. With the US Tech 100, we're risking $50 to $75 to make $525 to $550 because of the difference between the floor and ceiling there. So huge profit potential with low risk. Now the trade-off is that you are going to experience a lower winning percentage. So expect wins 20 to 25% of the time. For me, this is no big deal because of the big trade-off or payoff, but it is something to be aware of. This is not a high winning percentage strategy. Now,
Yeah,
I want to show.
let's just talk about this for a moment, Mark, if you go back on this slide. So,
Yeah.
as you know, different trading strategies have different characteristics. This here is a so-called home run strategy. So we are swinging for the fences. We want to make sure that when we hit it big, that we make 425 to 450 or 525 to 550. Therefore, we can strike out a lot. So we are not going for a base play. And I know I'm from Germany. So funny to talk German, to have a German talk about baseball. And honestly, I have no clue. I just learned what was explained to me. But you see, you get the idea. There are strategies that have a higher winning percentage. For example, a 50 or 60% winning percentage. Usually what you see there is that you might risk $100 trying to make $200. And that is okay. You also sometimes have scalping strategies where your risk reward is actually inverse, where you would risk $400 trying to make $100. These scalping strategies give you a high winning percentage. So there's always a trade-off when you have a high payout like here that you have a lower winning percentage. The cool thing is, just think about it. You can absolutely have 8 losing trades here for $50, and then you win it back and you make $450, $500, and in the long run, it will make sense, right? Again, all of this is where we talk about hypothetical results here in a moment, but we want to share some results with you of based on our testing, what would have happened if you had traded this strategy over the past year. And this is where you see some very typical characteristics of this strategy. So let's talk about this, Mark.
Yep. And before we look at some numbers, again, these are hypothetical results. So full disclaimer here, this is on past performance and hypothetical returns. Past performance is not indicative of future results, but we're going to show why we like the strategy based on what's occurred in the past. And read this if you don't fully understand it. But here we have some numbers based on hypothetical trades. Now, I want to point out that this is actually for the E-mini S&P 500. Now, we mentioned that the E-mini S&P is the indicative index for the US 500 market. So what does that mean? Oops, let's go back. What does that mean? Basically, everything is 1/5 of what we see here if you're trading US 500. So as an example, the total net profit you could divide by 5, and that's what you would experience in a year if the exact same trades occurred in the next year, right? Average trade, you could divide that by 5. Max drawdown, you could divide that by 5. Winning percentage stays the same at about 21%, and profit factor 2.04, meaning that you are making $2.04 for every dollar risked. But these are the type of performance numbers that we are basing the trading strategy on. Now, this is what the equity curve looks like. And so this is very typical for a home run strategy equity curve, right? Because what happens is you kind of plateau when you're not getting a home run, and then you have a huge increase in the account. And then it pulls back a little bit. Here we had a series of losses, and then a win, and then a little pullback, and then a win, a little pullback, win, pullback, win, 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 and then it kind of plateaus. So this is absolutely common for a home run type strategy, which this one is. And it could be that for a couple of weeks, nothing's happening and you're experiencing small losses, and then you get a couple of big wins. This is what I love about this strategy, but this is what you need to accept if you're looking to trade a strategy like this.
Yeah, but this is why also when you trade a home run strategy like this, it should not be your only strategy. This is a great strategy to supplement whatever else you're doing, right? Because as you see, when you hit the home runs, it is exciting, but there can be a time when you strike out quite often. So I would not trade this strategy alone and as the only strategy, but it is a great addition into whatever you're currently doing.
Yep, good point. And here, the US 500 potential. This is a perfect example of the strategy. It could be where trade number 1, you're down $50. Trade number 2, you're down $50. Trade number 3, you're down $50. Trade number 4, you're down $50. And then trade number 5, you have a winner, you make $450. So even though you had 4 losses in a row, you're up $250 per contract traded just by this 20% winning percentage, right? So this is what I would expect when trading the strategy. Now, I also want to look at numbers for the US Tech 100. And again, this performance report is based on the E-mini NASDAQ futures market, which is really just 5 times what the US Tech 100 would be worth. So we could divide the total net profit by 5. Average, total number of trades would be the same, but average trade divided by 5. The drawdown is also smaller, divided by 5. But overall, 20% winning percentage, even though bigger profits than what we saw with the US 500. And this is what the equity curve is. This is going back to the beginning of May. And we see here that a little smoother than the US 500, but again, this is what I expect. So home run, weeks where we're making small losses, home run, weeks, here we're multiple weeks of small losses, home run, small losses, home run, small losses, home run, and you get the idea. It's here, though, that traders get discouraged, right? Because if you're not expecting or willing to accept small losses, it's easy to have 4 losses in a row and say, you know what, I'm not going to trade this anymore. And then the very next trade is a winning trade. And so, just if you are interested in trading it, feel free to practice it. Nadex offers a great demo. But if you are really interested in trading it, I would be in it for multiple trades. I am trading this live with a live account. And again, here's the potential with the US 500, or sorry, the US Tech 100, where you have 5 trades, 4 losses in a row. 1 trade out of the 5 is a win. So a 20% winning percentage. Total profit overall is $350.
Yeah. Again, trade into this in addition to what you have. I mean, if at all, it's your choice. We're just here invited to present some trading ideas, some strategies that work really well with the various instruments that you have available here on Nadex. And the cool thing is, all you need is basically 5 minutes on Monday morning. And after this, it's set it or forget it. Either you hit the ceiling or you hit the floor. Now, Jim is asking here, what about partial wins? See, most of the time you get knocked out, hence the name knocked out, either with a profit or with a loss. It's very, very rare that between Monday, I mean, we're talking about the S&P 500 and the NASDAQ. So it's very rare that between Monday and Friday, we are staying in a narrow range. One of these days, you'll have a breakout, right? And if it is to the upside, boom, you get hit. Often markets, it's happening on Monday or Tuesday, right? It's often happening early in the week that you're getting knocked out either with a profit or loss.
With current market conditions and the ranges for the floor and ceiling, absolutely. It's not going to the end of the week, but it really depends on just how narrow the ranges are for the markets.
Right. So Larry asks, it's just 1 trade a week? Yeah, 1 for the NASDAQ and 1 for the S&P. So 1 for the US Tech 100 and 1 for the US 500. So technically 2 trades, but yeah, you got the idea, Larry, absolutely.
Excellent. So here's the setup, and here's the order ticket for the US 500. I'm going to show how to do this, but just a quick reference here. when we bring up the order ticket, we want our max loss to be between $50 and $75. We'll talk about this. And what we found is that TradingView, it's free software. We're not affiliated with it in any way, but to pull up the E-mini S&P, the indicative index, and to check RSI, this is a simple way to do that with TradingView. So I'm going to show you how to do it on TradingView, and we'll also pull up an order ticket with Nadex, show you how to set up the strategy. Let's do that now. So right now, it's Thursday, it is not Monday, I am not putting on a live trade, right? But this is what I would do after the close on Friday. And really, I could do it anytime between Friday's close at 4:15 p.m. Eastern time and Monday's open. But futures do start trading in the evening, Sunday evening. So just to avoid any confusion, it's usually easiest to pull up a chart sometime after 4:15 on Friday and before 6 p.m. Sunday, so you're not looking at the overnight data. So here we have TradingView. And I'm actually just, let me take a step back here. I'm going to go to TradingView and their homepage here, show you how to do this from the beginning. Now, there is a paid service for TradingView, but I'm using the free charts here. So what I want to do is I want to bring up the E-mini S&P first. And the E-mini S&P is the indicative for the US 500. So I'm going to type in ES, which is the symbol for the E-mini S&P. And we see here at the very top, it says S&P 500 E-mini futures. So I bring this up. And what I want to choose is the ES1 exclamation point. I'm going to click that. And it's going to bring up a chart, the S&P 500 E-mini futures. And by default, in this view, it shows a line chart, but I want some more detailed information. So I'm going to click on the full featured chart. And here I can make some adjustments and also add an indicator. Now, I'm going to be viewing a daily chart. So at the top of the chart, you can change the period. There's hours, minutes, seconds. I want to make sure that it's a day chart. And I like to use an OHLC bar chart, which is this. Same information as a candle, but I'll change this to a bar chart. So if you're looking at a line chart, I prefer a bar chart. It makes it easier to see what's happening each day. And then with the indicators, we see that there's an indicator button here. I'm going to click on this. And we could actually just search for RSI by typing in RSI. And here we see at the very top, relative strength index. So I can select this. And I already have RSI here. I'm going to just get rid of it for this example, because this is what you'd have when you first pull it up. Now there's one change here. By default, RSI for many platforms is 14 days, but I like to use a 7-day RSI. So I can click on this period and adjust the length from 14 to 7, click OK, and if it was after the close on Friday, so after 4:15 p.m. Eastern time, if I came here and I looked at this bar, and it's Friday evening, Saturday, Sunday morning, and I come down here and I look at RSI, I want RSI to have a value greater than 40. So as long as it's greater than 40, I can put on a trade for Monday. So we see that back here during the coronavirus sell-off that occurred in the market, RSI was in a steep decline. So I would not be putting on trades on Monday when RSI was below 40 on Friday. I only want to put the trade on Monday if on Friday RSI is greater than 40. Are we on the same page?
Yeah, and there's a question, how can you do this on the Nadex platform? And again, Mark is the old dog, and you know how it is with the new trick, so he's not using the new version. So that's where maybe Todd can help later on. Not really that familiar because, yeah, both Mark and I use TradingView, especially since it is free. It has helped us. We'll do also some other trading as well on stocks and options. But if there's a way to do this on Nadex, I'm sure that Todd will we're glad to
Yeah,
towards the
and
end of the presentation walk through
I'll
that.
just chime in quickly. We
Yeah.
do have RSI on
Perfect.
the new charts, so you can certainly turn that indicator on.
So
Excellent.
we can maybe do this here in a few minutes. That Todd can show you exactly how to do this on Nadex. So thank you so much. And yeah, sorry, I should have checked with you before. But again, this old dog here, Mark, sitting there in Sacramento, being a Californian. What do you want to do?
Yeah, well, the nice thing about TradingView is it's free, you know. But yeah, doing it straight from the
Yeah.
Nadex platform, and like I said, I love the new charts for Nadex. I just need to use them a little more because I've been
So
using
we'll jump over to this here in just a moment. So the question is, how are we choosing 40? We have tested a lot of different variables. So 40 is just the best one. And again, the idea here is you're buying the touch brackets, and this means that you want it to hit the ceiling. So you actually want to try to find an edge in the market that you have a criteria where you can judge it is more likely for the markets to go up. And again, of course, we don't know what the markets will do. The idea here is we put the odds in our favor, and the odds are in our favor when the RSI is above 40. So this is where I can assure you that Mark spends many, many hours and days and sometimes even weeks on testing the best parameters, going back over the past few years and just checking out what is the best one. And this is where we found 40 is a good number here. Make sense?
And there's a good question, can you short when RSI is less than 40? Actually, with testing, it didn't show that the numbers made sense to do that. So long only, buying it on Monday's open. Now, real quick here, if you want to check the Tech 100, US Tech 100, say we're just using NQ, one exclamation point. NQ is the E-mini NASDAQ. Same idea, same process, just a different symbol.
Yeah. And we're going to the Nadex platform here in just a moment.
Yep.
Good.
So I'm going to bring up the Nadex platform again. And what I want to do here is I want to show how to pull up the touch bracket, or sorry, the knockout.
Still used to touch.
No, we're gonna get it one of these days. So the question is, okay, how do we know which one to pick? Well, on Monday, I get things set up a couple minutes before the open and to get ready to place an order at the open at 9:30 Eastern time. So I come down here, I bring up knockouts, and what I want to do is bring up indices. And if we wanted to trade the US 500, I click on US 500, and there's always 4 knockouts. There's always going to be 4 that you can choose. And what you'll find is the top one is the one to pick 95% of the time, right? So I'm going to go ahead and click on this to bring up an order ticket. And then here, I could bring up a buy ticket by clicking the offer and adjusting the size to 1. So we see that right now, the max loss is 81. And all I do is I'd adjust this down to 75, or you could put in an order for 50 and place the trade. If it's between 50 and 75 at the open, I could just submit the trade automatically or make it a market order, but I don't want to risk more than $75 on the trade. And then if it was only like $20 of risk, what could happen is that this one's gonna get knocked out, so then we choose the second one. But like I said, 95% of the time, it's the top knockout that we're trading. And if we see that the risk is less than 50 at the open for this top one, then we always go to the second option, and we want to risk between $50 and $75 on the trade. Now, I want to point something out here because, you talk to traders, and some traders love trading options, and there's this idea that equity options and weekly options are great. But I want to point out a huge advantage between trading knockouts and trying to trade equity options, like on the SPY, right? When weeklies came out, people thought, oh, the weeklies are going to be great for equity options, but there's time value priced into the weekly SPY options. So what I was doing is I was taking this idea and also trying to trade options, equity options, comparing the two. But the problem is that you lose money on the SPY option, but with Nadex knockouts, you don't have that time value built in. So that's a huge advantage. So if you want to get a real like dollar for dollar move, it's a perfect vehicle for putting on a trade Monday and really maximizing that opportunity where equity option could actually be losing money. And here's the other advantage, because you could do the same idea with futures, but with futures, you need like $5,000 to hold a position overnight. With this touch bracket idea, you're basically trading the futures markets, but 50 to 75 bucks is taken out of your account, so you're not on the hook for 5,000 or more, right? So it's just the absolute perfect vehicle, in my opinion. I love knockout brackets. Like Marcus said, we've been trading with Nadex for about 5 years now. The knockouts have really been nice, and I think they're the perfect vehicle for really any trader.
Yeah. All right, cool. I know that there were quite a few questions that we tried to answer here. Todd, is there any way that you can take over and maybe show how to do it on the new Nadex platform?
Indeed, I am going to take over here in a second, and if anyone's got any more questions, please type them in while we have Marcus and Mark here, the experts on this. And I am now going to go ahead and I'm going to take over presenter from you, Mark. And I am going to, it helps if I show the, the right application. Let's go to the Nadex platform. Here we go. You know what? I'm actually going to start over from the beginning. Let's go ahead and get rid of this. And just so people can see it, give me 1 second. All right, we're going to go back all the way to the beginning. Oh, you know what? So here, let's just start from something else. Okay. So that we can, so you can see how I got there. Here we go. So on the new platform, we would go, all right, if you were here and I just populated the screen with pretty much anything, I'm going to go ahead and go to knockouts. When I go to knockouts, as Marcus and Mark mentioned, they like to do these in the indices. So I'm going to click on the indices and I am going to look at the S&P 500, the US 500. When I drop that down, you'll see that there are 4 knockouts. I am going to go ahead and just pick one of them randomly because, and I'm going to hide this now. The reason I did that was, again, if you notice on the chart, you can, with our new charts, you can quickly and easily identify the 4 touch brackets, and it will highlight on the chart very boldly where the floor and where the ceilings are. As Mark mentioned, they like to use the one that's either towards the top. For now, I'm just going to pick the second one just for fun because I just clicked on it and it's a bit in the range and it's not so close to the edge. And if I were going to buy one of these and I'm going to go, and you can always middle the market. You never know if you're going to get a fill in between, but I'm going to go ahead and put in 56.50. Looks like we're ticking down a little bit. And you'll notice the maximum potential loss, if it were to drop out and hit the lower boundary, it's calculated for you. Maximum potential profit. And if you wanted to change that to a lower risk, higher reward, we would choose the top one. Notice here where we're only risking a little bit. Now this is assuming this is the trade that you wanted to do. If you wanted to put RSI on, if we look in not in drawings, in indicators, relative strength index is an indicator, and I'll just go ahead and drop RSI onto the chart, and you will notice it will populate right. Of course, I clicked on something and I want to keep this up so you can see it nice and easy. You'll see the RSI down below, just as it was on Marcus's and Mark's screen. Again, this isn't, this isn't a end of the day Friday setup yet. They also, while you've got the chart of the S&P 500 here, you can clearly see where the knockout levels are, so you can always switch them around and choose which one suits you the best. As you're monitoring RSI, notice how Mark had mentioned that 14 is usually the standard, and we've got different ones in here. If you wanted to change this to 8, you would simply click on the period. All right, and instead of 14, we wanted to make this a 7. You would just drop this down to a 7. Now we've got the weekly one. And when I hit apply, notice how that did dramatically change the RSI value, and it's dropped. I mean, it's clearly recently it's dropped. So again, you would have to apply what Marcus and Mark were just talking about, but for you to find it on the new Nadex platform, it is absolutely right here on our charts, where you can quickly identify all 4 of the different brackets. You've got a chart of the underlying. Know that you can customize that chart for its interval, but under our indicators, we do have relative strength index. If you were curious about it, the little I, the information, does tell you on what it means, on how it is a popular momentum indicator. And when you do have RSI up, you would see it populated at the bottom of the screen, and your ability, if you click on the little box over here, to change the parameters. You can even change how it displays. If you want thicker lines, the colors, everything is customizable.
Right. All right, fantastic. I see that there's a few more questions. So Dennis is asking, so the strategy says not to enter the trade if it's not Monday. Correct. You do it Monday morning, right at the open of the US stock market, and this is where you put the trade on. Now, if at this point you cannot get a risk reward ratio of 50 to 450, you just place a limit order and let it play out. And maybe throughout the remainder of the day, or maybe on Tuesday, the markets will come back and get you into the trade. So this is where it absolutely makes sense to use limit orders here with the risk that we suggested. And again, this is a super simple strategy, absolutely easy to execute, because all you need to do is look at the RSI. If it is above 40 for 2 markets, so we're talking about the US 500 and then the US Tech 100. So these are the only 2 markets. If it is, you're putting a trade on, as Mark has shown you, and you set a limit price. If the risk is higher than $50 to $75, you just pick what you're most comfortable with, $50 or $75, put the trade on, let it sit there. If you're getting into the trade, you don't have to do anything. You don't have to set a profit target or stop loss. That is the beautiful thing about touch brackets or knockout trades. I still have to get used to it, Todd. Sorry about this. So knockout trades means that as soon as it touches the ceiling, you're getting knocked out with the profit. You don't have to worry about it. So it's a perfect set it and forget it trade. And again, not saying that this is the only strategy that you should trade, but it's definitely something to consider in addition to what you're doing right now.
Absolutely. And I went ahead and took the screen back just to make some final comments here. Actually, so these are trades that I placed live this month. So on May 4th, because I know that, some people are saying, well, can I sell? Or what if RSI is below 40? Or what if I want to day trade? What if honestly, you could create all sorts of strategies, but this is a strategy that we have with set rules, with past performance that we've tested, that we've analyzed, and that's why I am risking money in the market on a live Nadex account with this strategy. So on May 4th, I went long the US 500. I bought the 27.89, 28.39 touch bracket at 27.96.5, which meant that I had $75 of risk, $75 deducted from the account for every contract. The payout was $500 on May 4th, so a one-day trade of $425 profit per contract traded. I was unable to get into the US Tech 100 based on the rules because the US Tech 100 took off, but we had a nice win on the US 500. On May 11th, Monday, we had no fills. Basically, I was trying to put in trades to get in, but because it just ran away, I was unable to get into a trade where I was risking $50 to $75 at the open, and I moved on. Now, on May 18th, I was able to go long the US 500, and I was able to buy that touch bracket for $75 at risk. I was also able to get into the US Tech 100, and I was able to buy that touch bracket risking $75. Both of these trades worked out, $425 profit per contract on the US 500 and a $525 profit on the US Tech 100. These were live trades, but I want to point out that now I've had 3 winning trades in a row, so I'm okay if I have a couple of losses, right? That's how the strategy works. It's a lower winning percentage, high reward strategy, but these were actual live trades. This week I did not put a trade on because I'm strict with my rules. Monday was a holiday. I couldn't trade, so now I'm looking at an opportunity on the upcoming Monday, as long as RSI closes above 40 for those markets tomorrow at the close. So just to recap, I'm checking the daily chart for the E-mini S&P and the E-mini Nasdaq, and if RSI with a 7-period setting is greater than 40 after Friday's close, I'm looking to buy a knockout. I'm placing a trade Monday at the open for only risking $50 to $75, and it's set and forget. I either hit my ceiling and I make full profit on the trade, I hit the floor, I'm out for a small loss, or it goes on until Friday's close and I make profit or loss based on the entry and where the market closed.
Yeah, I know that we have to wrap up, and I know that there's questions. So what if we set the RSI higher? What if we want to get out of the trade earlier? What if we do this? Listen, you can do whatever you want. That's a beautiful thing. You're all adults. I mean, you can have chocolate ice cream for breakfast, and you can have cereal for dinner. You can trade whatever you want. We're giving you the rules over the strategy together with the hypothetical results, as well as some live results, exactly how we are trading it. Use this education that you're getting here over these 2 days at Nadex as trading ideas. By all means, test it for yourself. Use the demo account. I mean, you have a fantastic demo platform here, and it's a demo platform that doesn't expire, or expires at some point, but not the typical 30 days. So you have all these resources at your disposal, and feel free to use it. If you want to contact us for more questions, I mean, you find us at rockwelltrading.com, and there's a contact us. You'll find our email there. You find our phone number there, because I know that we have to jump off. We went a few minutes over our allotted time, and we want to make sure that you can take a break before the next speaker is coming on. But that's what I wanted to share with you, a very simple strategy, a strategy that is easy to execute, and a strategy that might introduce you to these knockout instruments that are available on Nadex that you might not have heard about, and that we feel are just fantastic. And it just makes sense if you're already committed to Nadex, if you already have an account with Nadex, whether it's a demo account or a real account, it makes sense to trade as many of the instruments as they have as possible, right? Because, as we said, this is a strategy that you use in addition to your other strategies, because you only place 1 trade a week for the US Tech, for the Tech 100, 1 for the US 500, and that's pretty much it. And these are the results. These are the hypothetical results for the last year. These are the live results that we have achieved trading it, and I hope that it helps.
Awesome. Marcus, Mark, thank you both. I think that was a really cool strategy. I think people are definitely going to take a look at that, and hopefully it helps them in their trading journey. Again, if you wanted to follow up with Marcus and Mark, you'll find them at Rockwell Trading, and you feel free to reach out to them there. I'm sure they're there to help as well. So thank you. With that, we are going to take a little bit of a break. I know we've got 11 minutes before the top of the hour, before my colleague Dan Cook brings it home at the end of the day. In fact, I would like to, let's just put that screen up. I'm going to, here we go, day 2. we are going to go to our last session, the 8th and final session of our 2-day virtual education summit, where Dan Cook will cover trading strangles with binary options. So let's go ahead and take a break. Everyone gets a chance to stretch their legs, and hopefully we will have you back at the top of the hour for the very last session.